So my journal entry for office supplies is going to be a debit to, we have office supplies expense. And a credit to office supplies. Because office supplies was a debit balance and we had to do a credit to decrease it by the calculated amount here. That was the $400. Okay, so that will hit the expense side at the debit and will hit the asset for office supplies for a credit. Okay, letter C. This month's depreciation on the computer equipment is $500. So this is what I had skipped over, the accumulated depreciation for computer equipment, and we had depreciation expense for computer equipment. This is it right here. This month's depreciation is $500. So I'm going to hit depreciation expense, debit, because all expenses of course are debit, for computer equipment, abbreviated computer equipment, $500, and the credit will go to accumulated depreciation, which is a contra asset account. And as a contra asset account, it is a credit balance. Okay? Letter D. Employees earned $420 of unpaid and unrecorded salaries as of month end. So this is money that they worked for, they earned it. We have not paid them yet. We'll pay them at payday, but payday is not here yet at April 30th. It's probably going to go on into May sometime. So I still have to record the expense of the $420 because they worked it. And then I'm going to also show that there's a salaries payable. Okay, meaning I will pay them in the near future, not right now, but sometime in the future, but not right now. Okay, so salaries expense, for $420, and then salaries payable, credit, which is the liability, $420. Okay. Letter E. The company earned $1,750 of commissions that are not yet billed at month end. So if it has not been billed, the person that we did the work for still owes us. Okay. And we need to recognize the fact that we have commissions earned right there, because this is company earned this much in commissions. So we have to recognize the fact that we earned the commissions for $1,750, but we also have to create an account receivable, meaning we are going to receive it. We don't have it just yet, but we will get it in the near future, but we don't have it yet. We will get it, but it's not here in our hand, okay? We don't have the cash. We will get the cash. And so that's accounts receivable. We are going to receive the cash sometime in the near future. So I will debit the asset account, accounts receivable, and that was for $1,750, and then the credit will go to commissions earned, which is our revenue account, because we have to recognize the fact that we do have revenue that we earned. Even though we don't have the cash, we still earn the revenue. We have to recognize that. Okay, that's it. Last entry. What do we do next? Prepare adjusted trial balance as of April 30, prepare the income statement and the statement of owner's equity, and blah 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 blah. Okay, so let's not get too far ahead of ourselves. First of all, I want to go to this schedule, and I want to take all these adjustments that I've done and update it on here, okay? And I'm also going to update it on my T account because I need to know about that as well. Okay, so let's take this and put it over here. So let's start with insurance expense. Here's insurance expense right here, and that was a debit for $133. And then prepaid insurance is right here, and that's a credit, $133. Office supplies expense right here, which is a debit of $400. Office supplies, which is here, is a credit of $400. Depreciation expense, debit, right there, depreciation expense, debit $500, and then accumulated depreciation is going to be a credit for $500. Salaries expense, right here, that's a debit of $420. Salary payable is right here, and that's going to be a credit of $420. Accounts receivable right here, debit $1,750. Commissions earned right here, credit $1,750. And before I get too far ahead of myself, let's update these numbers as well. Okay, accounts receivable, I do have right there $1,750. Office supplies, did I do anything? Yes, I did. Office supplies is right here, credit $400. I already did that, so I'm not going to hit it again, okay? Prepaid insurance, did I do that? Yes, I did. Prepaid insurance, credit $133. Computer equipment, nothing. Accumulated depreciation, yes. I did have accumulated depreciation. Where is it? Right there. Credit $500. Salaries payable. Slide that down a bit. And I had salaries payable right here for $420. Credit. Capital, I didn't hit. Withdrawals, I didn't hit. Commissions earned, I did. Right there, $1,750. Depreciation on computer equipment, there's your $500 expense. Salaries expense, yes, $420 debit. And I think I had insurance expense, did I? Yes, I did. Insurance expense, debit $133. I don't know if you can see that from way down here, but there it is. Okay, rent expense. Did I have any rent expense? I don't think I did. No, I didn't. Office supplies expense, yes. Office supplies expense of $400 debit. Depreciation expense, yes indeed, $500 debit. Okay, forgot to change that one. That's computer equipment. Repairs expense, I didn't have any. Telephone, didn't have any. Alright, I'm done with this so far. Okay. From this point, I will then total up everything that I've got. So my accounts receivable is at $17.50. I'm going to leave that alone. Office supplies, well, I'll go ahead. $17.50. Here we go. And I have office supplies done, prepaid insurance. So 2,400 minus 133, 2267. Computer equipment 20,000. Accumulated depreciation 500. Double underline. Salaries payable 420. Zombie capital, I'm going to leave that alone for right now. Same thing for withdrawals, commissions earned. I'm going to put a subtotal in here for right now, and that's going to be 9,750. I'm doing this for a specific reason. You'll see it later on why. Depreciation 500. Okay, that's $1. I'll let that go for now. Salaries expense, I'll put a subtotal in here, and that will be 1,600 plus 1,600 plus 420, 3,620. Interest expense 133, I'll let that go. Rent expense 1,800, let that go. Office supplies expense, depreciation expense, repairs, all these are $1 amounts, so I'm going to let those sit for a bit here. And then I'm going to update now my adjusted trial balance. Folks, I tell you what, in a worksheet situation like this, what you calculate over here is exactly the same thing as what I calculate at the bottom of each of these T accounts. Okay, so each of these T accounts is literally being laid sideways for each account here. So just think of cash as being a T account that's sitting on its side. There's been no adjustments, but for instance, accounts receivable started out with 0, and then it had a debit of $17.50. Here's accounts receivable right here. It didn't have anything, and then we put $17.50 debit in there. What do you think the ending balance is going to be? Debit of $17.50. So it's going to be exactly the same thing here. A debit of $17.50 on my worksheet. So I'll put debit $17.50, and then I'll put $27,000 for cash because that's also a debit. My office supplies was at 1,000 debit, had a $400 credit. What do you think is going to be over here? Well, take a look at my T account. I had 1,000 here, I had a $400 credit. What's the ending balance? $600 debit. So that's what I put over here. Okay, it's pretty straightforward stuff. So I'm going to go ahead and update the rest of these. This should be 2267. Computer equipment, 20,000.